As the U.S. markets are closed for the weekend, BigBear.ai Holdings, Inc., trading under the ticker BBAI, last closed on Friday, October 3, 2025, at a price of $7.19. This represented a slight downturn of about 1.1% from the previous session, a move that occurred even as the broader market saw some gains. Now, the common perception, the widespread belief, is that a company like BigBear.ai, operating at the very heart of the artificial intelligence boom and deeply embedded with U.S. government and defense contracts, should be on a straightforward upward trajectory. The narrative is simple. AI is the future. National security is a top priority, and therefore BBAI is a clear winner. But that's where the expectation starts to diverge sharply from the unfolding reality. The reality is that BigBear.ai is a far more complex and volatile story than the surface-level narrative suggests. While the long-term potential might be significant, the recent stock movement reveals a company grappling with the immense pressure of converting high-profile announcements and partnerships into consistent, predictable revenue growth, a challenge that many investors, swept up in the AI fervor, might be overlooking. Let's dissect the recent trading activity to truly understand the dynamics at play. The stock's performance has been anything but stable. We've witnessed a period of significant volatility, with sharp rallies often followed by equally sharp pullbacks. For instance, in late September, news of BigBear.ai's collaboration with SMX to enhance maritime domain awareness for the U.S. Navy's Fourth Fleet at the UNITA's 2025 exercise sent the stock soaring. The market, hungry for any sign of progress in the lucrative defense sector, reacted with predictable enthusiasm. This is a classic example of expectation driving price. The announcement of a partnership with a major military exercise immediately conjures images of large, long-term contracts and a deep integration into the defense apparatus. However, the subsequent price action tells a different story. The initial excitement often gives way to a more sober assessment of the situation. Investors begin to ask the harder questions. What is the actual monetary value of this collaboration? Is it a one-off demonstration of capabilities, or does it represent a firm, multi-year revenue stream? The lack of immediate, concrete financial details often leads to profit-taking and a retracement of the initial gains. We saw this pattern repeat with the announcement of BigBear.ai's technology being used to accelerate passenger arrivals at Nashville International Airport. Again, a positive development that speaks to the real-world applications of their technology. But the market's initial optimism was soon tempered by the realization that scaling these deployments across numerous airports and translating them into substantial, recurring revenue is a long and arduous process. The trading volume during these periods of high volatility has been notable, often surging on news-driven days. This indicates a high level of interest from both retail and institutional investors. However, a closer look at the institutional ownership reveals a more nuanced picture. While there has been an increase in the number of institutional holders, which is a positive sign of growing confidence, the overall institutional ownership percentage is still not at a level that would suggest a widespread, unwavering conviction in the company's long-term prospects. There's also the matter of insider transactions. The recent sale of shares by the chief financial officer, while not necessarily a red flag on its own, does add a layer of caution for investors. When insiders sell, it can be for a variety of personal reasons, but it rarely signals a belief that the stock is on the verge of a major breakout. These are the subtle but crucial details that the headline chasers often miss, the details that separate the expectation from the reality of the investment. Many investors may be looking at their individual brokerage accounts on platforms like Fidelity, Schwab Intelligent Portfolios, or even newer platforms like Robinhood and SoFi, and seeing the potential in a stock like BBAI. The accessibility of online investing and the ease of self-investing have brought more participants into the market than ever before. However, this ease of access can also lead to decisions based on incomplete information. It's crucial for anyone using these investing sites, from Fidelity Investments with its extensive offerings of Fidelity ETFs and Fidelity mutual funds, to the more streamlined Robinhood app with its focus on Robinhood stock trading and even Robinhood crypto, to look beyond the surface-level story. To truly grasp the situation at BigBear.ai, we need to understand their core business. The company operates in the realm of decision intelligence, providing AI-powered solutions to both government and commercial clients. Their primary focus, and the area that generates the most excitement, is their work with the U.S. government, particularly in the defense and intelligence sectors. They offer predictive analytics, machine learning, and other advanced AI capabilities to help organizations make better, faster decisions in complex environments. This is without a doubt a critical and growing market. The U.S. government is increasingly looking to leverage AI to maintain its technological edge, and companies like BigBear.ai are positioned to benefit from this trend. Their involvement in projects like the U.S. Navy's UNITAS 2025 exercise is a testament to their technical capabilities and their ability to secure high-profile engagements. However, the financial performance of the company paints a more challenging picture. The most recent quarterly earnings report was a mixed bag, and that's putting it charitably. While earnings per share managed to beat analyst expectations, the revenue figures were a significant miss. The company attributed this shortfall to reduced demand from certain Army programs. This highlights a key risk for BigBear.ai, its heavy reliance on a small number of large government contracts. The timing of these contracts can be unpredictable, and any delays or reductions in scope can have a significant impact on the company's top-line growth. The updated financial outlook provided by the company, which now forecasts a double-digit decline in sales, further underscores this challenge. This is the stark reality that directly contradicts the expectation of a company riding a wave of unstoppable AI-driven growth. For those using tools like Interactive Brokers for their Interactive Brokers trading, the detailed financial data available on the Interactive Brokers platform would clearly show this discrepancy. The Interactive Brokers' fees are often justified by the depth of information available, which is crucial for making informed decisions about a stock as complex as BBAI. Do you think the government's budget allocation for AI and defense will see a significant increase in the next fiscal year? Comment your thoughts below. Looking ahead, the future of BigBear.ai is a tale of two potential paths. The bullish scenario, the one that aligns with the initial market expectation, is that the company will successfully convert its recent high-profile engagements into large, long-term, and recurring revenue streams. The UNITAS 2025 exercise could lead to a broader adoption of their technology across the Navy. The Nashville International Airport deployment could serve as a successful case study that opens the door to contracts with other airports and transportation hubs. If BigBear.ai can demonstrate a clear and consistent path to profitability, the stock could see a significant re-rating. The company's substantial backlog of contracts is often cited as a reason for optimism, but the key will be the speed and efficiency with which they can convert that backlog into actual revenue. A disciplined approach to managing research and development expenses will also be crucial. While innovation is essential in the fast-moving world of AI, investors will want to see a clear return on those investments in the form of new products and services that drive top-line growth. On the other hand, the bearish scenario, the one that reflects the current reality of the company's financial performance, is that BigBear.ai will continue to struggle with the lumpy and unpredictable nature of government contracting. The competition in the government AI space is fierce, with larger, more established players like Palantir Technologies also vying for a piece of the pie. BigBear.ai's relatively small size could be a disadvantage when competing for the largest and most lucrative contracts. The ongoing legal investigations into alleged false statements could also create a significant overhang for the stock, eroding investor confidence and potentially leading to further volatility. The high valuation of the stock, even after the recent pullback, is another point of concern. The company is trading at a significant multiple of its sales, a valuation that is difficult to justify given its current lack of profitability and the recent downward revision to its revenue guidance. For investors who have found BBAI through online investing and are considering adding it to their portfolio, whether through a SoFi Invest account for its user-friendly approach to SoFi investing, or a more traditional Fidelity brokerage account with its Fidelity Wealth Management services, it is paramount to weigh these risks against the potential rewards. The allure of a pure-play AI company with strong ties to the defense sector is undeniable, but the path to long-term success is far from guaranteed. In conclusion, the story of BigBear.ai Holdings, Inc. is a powerful illustration of the tension between market expectation and fundamental reality. The expectation, fueled by the broader excitement around artificial intelligence and the company's high-profile government collaborations, is one of a rapidly growing company on a clear path to dominating a critical sector. The reality, as revealed by a deeper analysis of its recent stock performance, financial results, and the inherent challenges of its business model, is far more complex. The company is at a critical juncture, and its future success will depend on its ability to bridge the gap between promise and performance. For investors, the key is to look beyond the headlines and the hype, to delve into the financial statements, to understand the competitive landscape, and to make a clear-eyed assessment of the risks and opportunities. Whether you are a seasoned investor using the sophisticated tools of interactive brokers, or a newcomer to the market exploring the options available through Robinhood or SoFi, the principles of due diligence remain the same. The journey of BigBear.ai will be a fascinating one to watch, a real-time case study in the challenges and opportunities of the modern technology landscape. The question is not whether AI is the future, but whether BigBear.ai can execute